Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. And what a stellar move on the markets. The week has started on a strong foot. We have a 170 or 180 point gain on the Nifty currently. The midcaps are powering through as well, and it is mostly led by the IT names and the banking names as well. So a lot of updates coming by, earnings that continue to be the focus point starting this week itself. And there's so much to talk about today.
So much to talk about. So many cues to track, especially now in domestic markets, the kind of updates that have come in over the weekend. We have a lot lined up on the show. An important development in the hospitality space is something too that we will be tracking. Nifty surpasses about 25,050 level, led by banks and financials, largely after a slew of positive business updates. Market breadth, however, remains negative. Metals and consumer durables drag.
Hospital companies get a booster shot from the centre amid an upward revision in the central government health services rates after 14 long years. Porter's Max Health surge in trade.
Nykaa rises after growth momentum accelerates in Q2, driven by the fashion and beauty segments, both of which see revenue growth of over 20%.
Poonawalla FinCorp shares surged 8% intraday after the company released its Q2 business update. The company's assets under management rose by 67.7% on a YOY basis to 47,625 crore rupees.
Jubilant Foodworks slips from the day's high even after posting a good Q2 business update with consolidated revenue up 19.7%, while Avenue Supermart slips over 2% too after the company's second quarter business update disappoints the street.
All right, and a 180-point gain on the Nifty. We are comfortably above that 25,050 mark. When we talk about mid-caps, it's a 0.5% of a gain at the day's high again. Bank Nifty is fueling the rally that we are seeing right now. That index is up almost 1%. The IT names also powering through today. The small caps actually in today's trading session are underperforming the benchmarks in some way. But yes, there's nothing to complain about so much. It's a 0.1% gain on the small caps. But let's talk about our mid-cap movers. Sudarshan is here with us to take us through the mid-caps that are moving around in trade. Sudarshan.
So we'll start with the sector hospital names which are moving higher after the government has decided to increase the CGHS price, and that has come after a long gap of 15 years. And on the back of that, we're seeing a big move in hospital names like Fortis Hospital, Narayana Healthcare, as well as Yatharth Hospital. You can see all three stocks are up somewhere in the range of 3 to 7%. Apart from this, all these stocks are reacting to quarterly updates. First on the list is Nykaa, which has reported consolidated revenue in mid-20s that company is expecting in Q2. On the back of that, stock is up sharply. Delivery is up as well. Also on Friday, company had announced that just for the festive season, its logistic has seen an increase of almost 19%. On the back of that, we are seeing a big move. Angel One today morning has come out with a quarterly update. Both on a monthly and on quarterly basis, company has reported increase in client acquisition. On a quarterly basis, it's up almost 12%. On a monthly basis, also it's up almost 1%. One stock that is under pressure after the quarterly update is the Avenue Supermarts. It has reported revenue growth of 15.4%, and all the brokers believe that this revenue growth is lower than their estimates, and estimates were somewhere in the range of 18 to 19%. Apart from these names, some of the stocks are moving higher. First one on the list is BSE. There have been some news related to the options data. On the back of that, it's up. Another stock which has seen a huge move, that is the Paytm. Last week, if you remember, the stock was under pressure, but today it's up almost 5%. Aditya Birla Lifestyle, after block deal of almost 6%, equity stock is up almost 8%. And one more stock that is higher with a healthy volumes is KIOCL. Some of the stocks which are under pressure, first one is Hemisphere Properties, down almost 18%, and Sammaan Capital, after the acquisition, after the announcement of IHC is going to acquire majority stake, since then the stock is down almost 11 to 12%. And last one in the list is Vodafone Idea, because today also Supreme Court has decided to defer the case to October 13, but it cannot be taken completely negative because both Vodafone Idea's council and government's council have decided to defer, and they have also just given one line that we want to celebrate Diwali this year. That's the reason they had requested for deferment.
Thank you so much, Sudarshan, for just taking us through all of the moves as far as the broader end of the markets are concerned. It's a good time to welcome Ruchit Jain from Motilal Oswal Financial Services for a quick technical check on the market. Good afternoon, Ruchit. Thank you so much for joining us. We want both of your views. Number one, on the index, and what are your individual trading picks for today?
Yeah, very good afternoon, Vivek. Very good afternoon, Sonal. On the index front, I think last 1.5 months, we have seen a broad consolidation and within the 1,000-point range of 24,400 to 500 on the lower side and 25,500 on the higher side. So I think we are still in that time-wise corrective phase. Good thing is that we have already seen some correction in last couple of weeks, and we are witnessing a bounce back from that lower end of the range. So I think price-wise downside seems to be limited on the index front from here on. We can see good leadership coming in from some of the banking names, and even the IT names are witnessing a bounce back from the oversold side territories. So I think these heavyweights would keep the momentum intact in the index, and we could see levels around 25,250 for now. So broadly, I think on a broader time basis, we are still trading within a broad range on the index front. But on a very short-term time frame chart, markets have formed a good support base around the 24,600 mark and are witnessing bounce back towards the higher end of the range. Now, Vivek, as far as stock-specific ideas are there, we are looking for such ideas where risk-reward ratio is now favorable post the recent correction. So a couple of names from the mid-size segment. One is Tata Technologies, where overall this stock has been an underperformer, but last 1.5 months, the stock has seen some consolidation. It has not fallen compared to what many other stocks within the IT space has seen in last 2 or 3 weeks. So overall, on the weekly charts, there's a good support base getting formed. So we are advising to go long on Tata Tech for a pullback move from here on, with stop loss below 685 for potential targets of 760. And NBFC space is really doing quite well, and Canfin Homes within that space has very good risk-reward ratio. The stock has seen a breakout coupled with very high volumes in last couple of trading sessions. So we are of the opinion that we should see a good trended phase in Canfin Homes from here on. So keeping a stop below 760, short-term traders can buy for potential targets around 850.
All right, Ruchit, thank you so much for joining us. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and sector and stock-specific action on the other side. Stay tuned.
Welcome back to Midcap Radar. The central government announced a long-awaited revision of CGHS rates, updating the prices for nearly 2,000 medical procedures. This will be the first major overhaul in over a decade. To discuss on this, we are now joined by Kunal Damesha, Pharma and Healthcare Research Analyst at Macquarie Capital. Thank you so much, Kunal, for joining us. First up, we want your take on this particular development. It's been a very long time that the industry has been asking for it. How does this impact the financials of hospitals? And if you could break it down tier-wise for us.
Sure. So basically, see, CGHS rates do get some form of inflation adjustment every year, but then it's like a pay commission that there is a major revision that happens after few years, right? And this major revision has happened, as you suggested, after over a decade. And if I look at the some of the high-ticket procedures in key therapies such as cardiology, orthopedic, neurology, oncology, I see the rates have been hiked by anywhere between 5 to 30% over the 2024 rates. So it is definitely a major revision. And when I look at some of the hospital companies, not all companies report the CGHS revenue separately, but most of them report something called government channel revenues. And government channel revenues, based on the company reports, is one of the highest for Fortis at around 20% plus, followed by around 19% for Max Healthcare, similar number for Narayana Healthcare, and roughly around 10% for Medanta and 10% for Apollo Hospitals. Now, within this government channel revenue, there are multiple channels again. One of that is CGHS, another one is ECHS, and then there are PSUs and some of the state government schemes, etc., kind of feature into that. Now, only Fortis provide a lot of clarity onto CGHS, and they derived roughly 4.5% of their revenue from CGHS in FY25. Which basically means roughly 25% of the government channel revenue is coming from the CGHS.
Kunal, you said only Fortis has provided some clarity. So what kind of numbers have you factored in terms of an increase that we'll see on the bottom line because of this increase that would come by? And, with CGHS, CGHS itself, which would the biggest beneficiary be apart from Fortis?
Sure. So I think, almost all the companies will have some exposure to CGHS. Specifically, the exposure would be higher for hospitals, which have a significant presence in Delhi NCR region, because that's where maximum of the central government employees are situated, right? So that is one. In terms of, there is a second order impact as well, because the other government channel also, some of them refer CGHS as a reference rate. So basically, let's say the ECHS, which is for the servicemen, right? That kind of refers to CGHS rate. So that is another channel which again will kind of get the rebates in terms of tariff rates. Now, in terms of the impact, I have not analyzed the exact impact or exact increase in the entire 2000 procedures where the rates have been revised. But as I said, the key procedure, my view is that the average rate hikes is around high teens percentage point. And if I assume that half of these government channel revenue for these hospital gets rebased by that high teens percentage point, then we are looking at somewhere around, and this is a pricing revision, so it should ideally should fall directly onto the EBITDA, and hence we can see EBITDA upgrades of anywhere between mid-single digit to low double digit is what my base case scenario would be.
Okay, Kunal, I want to ask your views on two individual companies. First up, especially as far as Max Healthcare is concerned, there are a couple of news reports indicating that cashless payment facilities by various insurers were under a cloud, and in fact, the company had said that they would look to stop it. That was the first one. And secondly, over the weekend, as far as Fortis is concerned, SEBI has given the nod for the open offer from IHH. How significant are both of these developments?
So I would start with the later one on Fortis.
Sure.
The clearance of the open offer from IHH definitely removes a long-standing overhang on the stock. This has been under judicial matter for quite some time, and this kind of clears the air for the company. However, at this point, it is not exactly clear that whether the IHH will follow up with a new open offer or would it be the same, because the earlier open offer at that point in time, which was blocked, which was somewhere around 170 rupees per share or something. So, we need to see, more clarity to emerge from IHH on that aspect, but definitely a removal of regulatory overhang on the company. And for Max Healthcare, yes, various media reports are suggesting that the four health insurance companies have kind of suspended their cashless facilities. Some at the pan-India level, some at the Delhi NCR hospitals of the Max Healthcare. So to that extent, I think there could be some impact. Max Healthcare derives 40% of its revenue from the insurance channel. And these four companies, the four insurance companies which have kind of suspended the cashless facilities, they accounted for almost 30% of the health insurance premium in the retail channel. So, that there could be some impact is what my expectation is. Very difficult to quantify, given we don't know the exact market share state-wise for these insurance companies, and also the procedure mix, etc. But I've been highlighting this, in my analysis, that the ARPOB growth of the industry, hospital industry, has been at around 11%, starting from FY19 to 24.
Okay.
And this is obviously above the historical range.
Got it.
Primarily, it is driven by tariff hikes, and this is what
All
is
right.
causing these
Okay.
issues.
Okay, Kunal, thank you so much for joining us. Out of time now, but that was quite helpful. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets, and Hormuz will come back, focus on power struggle and boardroom battle at Tata Sons. Stay tuned for that. Welcome back. Well, 7 years after the ugly spat between Cyrus Mistry and Ratan Tata over the Tata Sons, another boardroom battle is brewing at what is one of India's oldest and largest conglomerate. Hormuz is here to tell us more.
Well, it is indeed another power struggle that is brewing at one of India's largest and oldest conglomerates, and that is Tata Sons. And now reports are emerging of new infighting 7 years after that bitter battle between the late Ratan Tata and the late Cyrus Mistry. Now, what is exactly the bone of contention here? The bone of contention is the power struggle within the Tata Trust's leadership. Now, Noel Tata is currently the chairman of Tata Sons, and he took over after Ratan Tata's passing. And he is now opposed to Melly Mistry's attempts to get a board seat, and he is also opposed to Melly Mistry having a leadership role at the Tata Trusts. Now, who is Melly Mistry? Now, he is a director of the Meher Palonji Group. He is also a strong supporter of the late Ratan Tata and an estranged first cousin of the late Cyrus Mistry. Now, during this bitter public battle between Ratan Tata and Cyrus Mistry, Melly Mistry was in favor of Ratan Tata during this battle. Now, what is exactly Tata Trusts? Now, Tata Trusts is an entity which has the majority shareholding in Tata Sons. They have close to 2/3 of the stake here, and then Tata Sons invests in multiple companies down there. Now, look at the trustees here at the Tata Trust. Noel Tata, of course, being the chairman. The other trustees include Venu Srinivasan, Melly Mistry, Taras Khambata, Pramit Jhaveri, and Jahangir H.C. Jahangir. Now, this is the trustees at the Tata Trust. Now, if you take a look at the board of Tata Sons, we'll find N. Chandrasekharan as the chairman. We'll find directors such as Noel Tata, Venu Srinivasan, Saurabh Agarwal, who is the CFO, and directors in Ajay Piramal, Harish Manwani, Anita George, an independent director, and Ralph Speth as the independent director as well. Now, the recent changes that were made to Tata Sons as a result of that bitter boardroom battle, there was an amendment made to the Articles of Association during the 2022 AGM, and that prevents the same person from chairing Tata Trusts and Tata Sons at the same time. As a result of which, Noel Tata is the chairman of the Tata Trusts, while N. Chandrasekharan is the chairman of Tata Sons. Now, the amendment was approved by shareholders, and therefore the two entities are now legally separated. Now, very recently, the 11th of September, which is last month, the longish board meeting of Tata Sons ended with the removal of Vijay Singh from the board. The trustees had a very close call. They voted 4-3 in favor of Singh's removal. Now, while Noel Tata, Vijay Singh himself, and Venu Srinivasan continued in favor of Singh to continue on the board, the other 4 members were opposed to that. But who is Vijay Singh? Now, Vijay Singh is the vice chairman of the Tata Trust. He's aged 77. He's the former defense secretary, so he's a seasoned bureaucrat, and he was one of the late Ratan Tata's closest confidants. Now, the issues that were raised in that board meeting is the fact that Vijay Singh is now above the cutoff age, which is 75 years old. The other issues which were raised by Pramit Jhaveri included the fact that the reappointment of Anita George as an independent director had to be done in consultation with all the trustees. Now, that was not done. The other issue that was raised is that the Article 121A, it needs all investments, acquisitions or disinvestment proposals above 100 crore to have prior approvals from the trustees. That is not being followed as well. Now, some more developments that were during that board meeting is the fact that Noel Tata and Venu Srinivasan went on to say that the removal of Vijay Singh will set a very damaging precedent. And later on, Taras Khambata nominated Melly Mistry to the board of Tata Sons, which was rejected by Noel Tata. Now, the key challenges that Tata Sons faces, of course, we are hearing a lot about the IPO pressure from the Reserve Bank of India. There are also questions being raised over the transparency, governance and future control. And culmination of all of this, now sources are telling CNBC-TV18 that the Tata trustees are going to meet senior government officials for a meeting. They are going to meet the officials on matters related to the functioning of the trust, and Noel Tata and N. Chandrasekharan are both likely to be part of the meeting. So, another power struggle brewing at Tata Sons. We'll wait and watch where this goes next.
Thank you so much, Hormaz, for joining us with all of those details as far as Tata Sons is concerned. But with that, we are completely out of time on this edition of Midcap Radar. Your stocks when we return.